Hello friends, how are you all? Today morning when I was working on one project, I got a call from Mark, who's a CFO in a multinational group which is based out of US. And Mark asked me this question, which I thought that rather than giving answer only to the Mark, I should also answer that particular uh, question to you as well. So watch out this particular video where Mark is asking me a question, and then after I'll be back with my answers on that.
Hey, Abhishek, how are you? As we are near the end of the financial year that is March end, I want to ensure we're covering all bases, especially regarding the transfer pricing positions. Could you advise on what aspects we should consider from an India transfer pricing regulations perspective before we close books? Note that we can't afford any missteps, any oversights at last moment.
Sure, Mark. Thanks for asking the question. Now, to answer your questions, let me just tell you that there are three aspects that you should consider, as a CFO before you're closing your books of accounts for your Indian entity, right? And and also, if you are a tax consultant and if you are seeing this video, you should also consider these three important aspects which Mark is also going to consider before closing his books of accounts. We'll be there also to help Mark in that closures. And if you want us also to help you, you can also reach out to us. But before going to that video, let me just tell you that if you are a tax professional, if you are an ambitious tax professional, then we have already launched our course, says that is mastering the art of transfer pricing in 9 days. That is where the course has been opted by more than 30 professionals, and where we are imparting the entire TP knowledge by way of video contents, as also giving a group mentorship to them. You can check out the details for that course in the link below. Now, coming back to Mark's question. Now, what Marx has asked is basically he wants to understand that what are the key considerations from the transfer pricing perspective that he should take, or he should analyze, so that he can close his books without any oversight, right, or without any misunderstandings, and he can take TP positions well in advance. So that is where let me just tell you the three main aspects that you should consider as a tax consultant if you also have a MNC client. So the first aspect is, I would suggest, for the existing transactions, so the transactions which were there during this year as well, and the same transactions which were there during the last years, and there has not been any change in that transactions, then the positions which you have taken for the last year's transactions, that is financial year 22-23, the same type of positions for 23-24 also you can continue with. And in case of any abnormalities or major change or substantial or material change in that transactions, that is in the facts of that transactions or terms at which the transaction has taken, or the price at which the transaction has taken, if there has been any change, then you can obviously consult your TP consultant, or you can also ask us if you want a high level TP advisory on such transactions before the closing. That is for the existing transactions. Now, my second point would be on the new transactions which you might have undertaken with your associated enterprise, so which your client entity might have undertaken with its associated enterprise during this year, and this is entirely a new transaction, right? It has not been undertaken during any of the prior years. So in that case, you'll have to understand the positions which could be taken in your case, and obviously you should to consult transfer pricing consultant to take positions on their transactions if you're not sure about their arm's length price, unless and until, my first view would be that if you have discussed that particular proposed transactions before undertaking the same with your associated enterprise, right? So client has undertaken a detailed discussions with you before taking that transactions, or have undertaken a benchmarking analysis, then rest assured you can go ahead with that position, and accordingly you can close out on that transaction as well. I hope that clarifies. Now, the third point, that is documentation part, right? So before the year ends, it is better. So particularly, let me also tell you that in case if your client entity has undertaken any intra-group service transaction, meaning to say that technical fees, management fees, royalties, or any other such transactions, apart from that also any other type of transactions which are not intra-group services, though they require documentation to justify that there has been this particular services being rendered by your affiliated entity or associated enterprise to your entity, or vice versa, then it is better to maintain that documentation, mail trails, call logs, etc., what has been prescribed under the guidelines, and appropriately ensure that every documentation like intercompany agreements or any other documents which I mentioned, you need to ensure that particular things as well. So, to be prudent and, rather than running at the last moment, right, once when the compliance comes up, it is better to be proactive and maintain all the documentation and save them on your systems. I hope that clarifies. So guys, these are the three aspects that you should consider as a TP consultant, or when you are advising your client on TP matters, or probably if you wish to advise your client on TP matters, you should always make aware client about these three aspects. That is the existing transaction, the proposed or the new transaction which they have undertaken during the year, and the third is the documentation aspects. So these three are the main things. I hope that clarifies, and I hope this video was informative for you. If you have liked this video, please hit the like button, and if you are new to this channel, please do subscribe to our channel. This is C. Abhishek signing off. Thank you.